Hey, so I wanted to take a look at Tesla. It's been a while since we did like a news catch up. So it looks like in terms of news, we're going to do a couple months here from May 26th up to now. Uh, there was earnings in between there, so I'm going to briefly go over that and just kind of go through the headlines of the news. I'm also noticing at the time, so going back to like May, uh, or actually, we did check in on this one in July, early July. It was a technical analysis only. So from that point, it was trading at 274. Now it's at 242. So we'll see if that's a good buy point. It's lower. It also looks like we marked it as we didn't like the price at 274, so maybe 242. If that's not a good price, we'll look into what is a good price. We also noted a slight uptrend. Uh, so yeah, we'll look into that. But again, let's just start with their earnings. This is kind of old, so but let's just go over it. So earnings per share, they beat there by 9 cents. Also revenue, they beat there by, in this case, $0.2 billion or $200 million. Revenue growing strong year over year. CapEx staying pretty flat, at least quarter to quarter. Free cash flow went up a lot in this quarter. They also confirmed new record deliveries, beating expectations. Um, Also in discussion to license out their full self-driving. We'll go over that a little bit more in the news. We'll definitely bring it up. Something else here is looking ahead. A lot of the analysts are forecasting this revenue growth to continue growing in like the 30% area. So to see a 50, that is very uh, apparently it's going to be rare going forward, but we'll just keep watching it, see if how and if those numbers from the analysts increase, decrease, just to help us kind of plan ahead. Uh, Next, we have the income statement. It's a little bit cut off here, but again, just highlights here. Automotive revenue up 46% year over year. Energy up 74%. You can still see how little energy has to do with the automotive, or I guess total revenue in this case, because total revenue was about $25 billion. Auto revenue is making up 21.2 billion of that. Gross profits. Uh, they mentioned that this was going to shrink, and it definitely is, going from 25% last year, and then just recently, the past 2 quarters, it dropped below 20%, sitting at 18.2% right now. Operating expenses kept in check, I would say, considering it went up maybe less than half, or around $500 million compared to revenue, which has gone up 8 billion. So they've kept that in good order. Operating margin, you can even see it's gone from 14.6 down to 9.6. So they're doing a good job at that, kind of streamlining processes, I assume. Adjusted EBITDA, that has gone up to a degree. Cash and cash equivalents, that has also gone up. So overall, very good. The biggest complaints are the gross margins being cut, really, but they kind of explained they wanted to gather market share. I'm sure there's other EV type companies that are trying to join the scene, but they're kind of limiting that, I would imagine. Uh, Here is just same income statement, but this one kind of breaks out the operating expenses and the cost of revenues. So again, just a couple things to point out. Automotive sales, the cost of it, that has gone up a decent amount. Um, Total cost of revenues also has gone up a lot. Gross profit here stayed relatively flat, and so that's the thing that's hurting them uh, the most right now, is that revenues have gone up so much, but they're staying flat for gross profit. Fortunately, the operating expenses have been kept low, going from 1,700 to about 2,100, uh, and I guess I should say 1.7 billion to 2.1 billion. Next, we have just a more units kind of income statement here. So total production, we have nearing 500,000 cars in total. So we have the SX and 3 and Y underneath. That is the most popular, the 3 and the Y production. That makes up 90%, it looks like, possibly more. But total production up for all lines, 86%, so that's very good. We expected that considering revenue's grown so much. Total deliveries, that is record highs, I believe, and you can see year-over-year growth, 83%. Storage deployed, so I believe that's solar energy, so they are in the solar industry. That has gone up a lot, 222% over the past year, and that's in megawatt hours, so it's storage deployed. I'm not sure how much of that goes to the revenue. If we go back, yeah, it's still very small, 1.5 billion for a 25 billion company. Decent chunk. Like I would probably miss it, but it's not making or breaking this one. Supercharger stations, I believe that's also in their energy line. Possibly services another, but I would imagine that's the energy line too. That has gone up 33%, so it hasn't gone up too much, but it looks like they're going a different route with that, and we'll touch on that in the news. Here we have statement of cash flows, just a couple things. Cash from operations, that has kind of fluctuated between $2 and $5 billion, with Q3 of last year being that $5 billion. Right now, they made $3 billion off of that. Purchase of investments, that's kind of accelerated, it looks like. I know they have new gigafactories coming out, so I have to imagine that's where that money's going towards. Yeah, this one I think is the biggest one on record, so we'll see how that evolves. Hopefully it's more like big hits like this, and then it'll just kind of stop. But of course it depends on how quickly they're growing as the years come. Balance sheet, just a couple things. Cash, that has gone up about $5 billion over the past year, and you can just see it kind of steadily grow. Inventory, that has also gone up, but kind of makes sense. If they need to make more, it makes sense that they're going to have to kind of have extra left over because the next cycle. Current assets, that's gone up about $12 billion. It looks like most of it is in cash and inventory. Current liabilities currently is at about 27.5 billion. Compared to current assets, they're doing great. No complaints there. So some of the analysts, what we're projecting, because they didn't give us guidance from what I saw, but what we're projecting is 81 cents earnings per share with about 25 billion. So relatively flat. I think we're a little bit behind on the current revenue, especially if they put out like a 24, low 25 billion. Probably going to fall just a little bit short here unless, like I said, they do better than that and probably put in a solid quarter four. Earnings per share, that seems to be more in line. So they might meet earnings per share for the year, but revenue, a little questionable about that 99. So on to the news. Again, I'm just going to kind of give big headlines and just move forward because I know there's a lot of news to go over. Hopefully we pick up the pace, I guess, with Tesla, check on them more frequently to avoid things like this. But yeah, just to go over the past couple months. So Ford is working out electric charging partnership with Tesla, potentially even offering software for Ford to use in the near term, and possibly long term. Tesla is likely the winner when it comes to charging stations. So I don't know if we touch on it more, but yeah, so a couple of the car companies, Ford included, they want to use Tesla's charging point or charging system, and that kind of that definitely avoids confusion for a lot of users because that means there won't be like, I don't know, a three prong type plug, and then Tesla's using a two prong, and you can't use the same prong at the different charging stations. So this kind of just simplifies things for everybody. So not sure how much money will come from that. I didn't see any figures. So if you've seen anything that can build on this, by all means, please share that. I'd be more than happy to see that. But moving on, so we have Tesla sending Shanghai-made electric vehicles to Canada. So that Gigafactory is up and running. They're shipping things away, putting a number to Tesla's new supercharger for all business. So a couple projections, and then we have Elon Musk here. I mean, Elon Musk is pretty much telling us what he's expecting. Of course, he's not the CFO, so I don't know, but I'm sure he's kind of knows what he's talking about here. But Elon's projecting 30% gross margin and roughly 10% profitability. Meanwhile, people at Morgan Stanley are saying that the supercharging, they could see a 30% net profitability. And then like a dominant case is maybe like 80% Tesla share of, like 70%. Seems pretty crazy. And so I guess that's the difference. Maybe that tweet is not talking about the supercharger specifically, but I'm pretty sure I pulled it because it was referenced to it. But this might just be his Tesla as a whole, where this is talking about just superchargers. So I don't want to lead us down the wrong direction there. Those could be two separate things. Either way, positive for both. We would like to see that gross margins number get pulled up a little bit to close to 40 or 50, but for a car company, that's pretty good. Moving on, so lithium, that was an issue at one point. Haven't really heard anything since, but lithium supplies may not be enough to meet the EV demand. It's the way I believe Elon Musk put it, or maybe it was just someone in the industry. They just said it's an issue of making it more efficient or mining more of the resource. So right now it doesn't look like we have enough, but yeah, they could easily mine more. It doesn't seem like there's any shortage of it. It's just they don't have enough in supply currently. And then the alternative is just they can make it more efficient to use less lithium. I guess they just haven't needed to make it more efficient yet, even though I'm sure it's just naturally happening. Next, we have Tesla loses bull rating at Morgan Stanley with the AI premium seen at risk. Tesla's also downgraded at Barclays ahead of Q2 earnings. So again, that kind of gives us an idea of how long ago this is. And also the dates are here to show kind of like a weekly breakdown. And we'll see that. So here's a couple of dates. So just be mindful of that as we're going through. EV charging ports in the US expected to grow fourfold by 2027. Again, it seems like Tesla's going to be a major player in that. The industry standards body, SEA, to adopt Tesla's charging connector system. So that's tremendous for them. That should really accelerate their energy generation revenue. Not sure to what degree yet, but interested to see if that, say, doubles by, say, apparently it should like fourfold and then by 2027. That would be incredible if we saw that. Next, we have Tesla confirms new record deliveries, beats expectations. The estimates were 445, and the company produced close to 480,000. So very good. Tesla's eyeing producing 500,000 vehicles a year locally in India. This seems to be the trend. A lot of companies, Tesla now wants to create a facility in India. That's great. Nothing crazy here. Didn't put a price on it yet, so I'd be curious to know how much. That could be what they're purchasing in terms of property in this past quarter. I feel like we would have saw it though. So this might be like a next quarter purchase. So however much a gigafactory cost to build and set up, look for another one of those charges. Tesla also discloses talks to license full self-driving software to other automakers. Just another revenue stream. We mentioned that earlier, that we would bring this up. Not sure how much revenue that would bring in, but it's the potential to, have a continuous revenue stream where you buy the self-driving software for whatever, your Ford or something, your GM, and it's just like a monthly charge. Don't know how much it will cost, but once we find out, we'll see the impact it has on income statement and financial statements in general. Tesla is also being investigated by California on autopilot safety issues. We'll look into that. It looks like a continuation of that on the far right is, or the bottom right corner, is Tesla faces an NHTSA probe over steering control issues. So there were 12 separate complaints about a sudden loss of power steering assistance. Of those complaints, 5 pointed to a complete inability to steer. Not sure if those are connected, just happened to hit at the same time. I imagine they are connected. When you consider they've sold 500,000 and 12 of them have an issue, of course we don't want to hear about any mistakes, but if that's the ratio, that's a very small one. But again, just we need to be aware of that. Tesla's China deliveries fell to 2023 low. I mean, they just came off of apparently all-time highs in total. So to see a decline in the China facility, I'm not too concerned about that yet. And also the numbers, it's not a major drop. It was just a couple percent. It'd be different if it was like a major drop, but I think it's just, bumpy road, but relatively level and preferably kind of staggering upwards. This is the last slide before we go into the technical analysis. But again, so Tesla's discussing India plans with the Commerce Minister to discuss the car maker's plans to establish a manufacturing plant. We'll see how much that's going to cost. Again, potentially a full gigafactory's worth. I don't know how much that was. Probably between 100 million and a billion, something in that range. Pretty big range, but also we have Tesla's Chinese suppliers rush to set up EV component plants in Mexico to support new Gigafactory 6. So another Gigafactory coming out in Mexico will have a capacity of 1 million units a year. That's pretty substantial compared to they're making about probably around 2 million a year. So to have a factory that makes 1 million on its own, that's crazy. But they're expected to be operational second half of 2024. So it looks like China's plant's already built, so they're trying to help out the new factory that's going to be set up in Mexico in 2024. So it's just like I don't know, it's rolling down resources to, the new plant to get it up and running. And then the last piece is Tesla CFO steps down after 13 years at the company. Shares fall. It wasn't much. I mean, they are falling. We'll just pivot into the technical analysis now. It didn't really give any particular reasons why their CFO left or anything like that, but doesn't seem like anything's wrong. And their like accounting officer just going to step right in for now. It doesn't seem like a big deal, but just a little surprising, and to have a key figure person like that leave, it's you don't ever want to hear that. But yeah, so going into the technical analysis, so last time we looked at this was on July 9th. That seems so far away, but yeah, so July 9th, right in here, this little sliver of a pullback. Right around 274. Since then, it traded sideways, kind of trended up a little bit, but ultimately pulled back. It was outside of our uptrend range. It has now pulled back within the range and seems to be heading towards the bottom. I think a good pickup, like the ultimate pickup, there's definitely some support here at about 219. I don't know if it'll get that low. It technically shouldn't go that low, considering the uptrend that we have. Obviously, it can go outside of those parameters, but considering the uptrend, it would probably bounce around 230. So I guess I'm just keeping that in mind that our ideal spot is probably going to be like 230, but it could pull back to 220. So we would just be prepared for that. And then we do have a buy point marked at 186. That might be a little too low. I don't know if it'll pull back that far. But, 220, I feel like that's still on the table, at least for a week or two, you know? But, yeah, let's just start updating this. So, currently it's at 242. Right off the bat, I'm thinking this is fair value. I might upgrade it to a buy, but just first instincts, it looks like it's at a fair value. Again, we kind of touched on these, but buy point 186, that seems a little bit far-fetched at this point, but it's still within reason. I think for now, I'll just get rid of it just because it's a little bit too far out there. We also had 211. Looking back to when we last checked, 211 would be roughly, where is 211 actually? 211, so 211 was just forecasting a week ahead, but at the bottom of the uptrend. So to fast forward to today, the bottom of the uptrend right now would be 226. Since it's the end of the week and looking ahead, hopefully we're going to check on this a little more frequently, but the bottom of the uptrend right now would be 230. So I'm going to update the 211 to 230. And that's the only buy spots that I'm going to have. So the 219 and 230. Resistance, not much that I'm going to change here. So we have 254 in blue. Just looking back, there was a couple resistance points going back to early 21, mid 22, couple resistance points there. A little bit support in early 22, but overall, even though it's blue as like a fair value, I do feel like it's more resistance than not. So we'll keep it in. I don't think that's really going to be a strong resistance point. I mean, we've already gone through it. I think we'll continue, over the next probably month, as long as the uptrend continues. I don't think 254 will slow us down, but I'll keep it in for now. 281, that is just taking the uptrend of next week. So right now, the top of the uptrend would be 281. And then we have 298 in red. 298, there just seemed to be some resistance there. 1 point back here. Here's the second point. And then most recently, whenever we went a little bit outside of our uptrend range, it actually went all the way up to 298, 299, and now here we are pulling back. So that was interesting. I don't know if we would have played it that way, but someone possibly did. Just something to think about. Overall, just looking at the note that we had, slight uptrend for 6 months. Let's just reword that. Slight uptrend since January of 2023. That is still in effect. We noted to buy dips. That's what we're planning on doing. I want this one to pull back a little bit more, but it's very close. I'm watching this. That's all I can say. And we also noted decreasing profit margin for gaining market share. And yeah, we saw that in the earnings. So yeah, let's just update the date to today. And then, yeah, let's just do a quick recap here. And then we'll be out of here. So Tesla, second one here in blue. Currently it's at 242. I'm seeing buy points at 219 and 230. 230 being the bottom of the uptrend. 219 saw some support there, and it's not too far out of the range of reasonable while still kind of maintaining the uptrend. So I'm willing to pick it up at 230. That is the bottom of the uptrend. That is a buy point. If it fell back to 220, I would just add more if I have the funds to do so. Resistance, we have 254. It might struggle a little bit there. Don't expect it to be much. That point's probably going to get taken out sooner rather than later. Resistance at 281. That is just the top of the uptrend. So that is like keeping within reason, but at the very top. And then 298, we just seen some resistance there in the past. That's the point that I'm more interested in. It recently got rejected there just a couple weeks ago. So that one might be a little bit troubling, but as long as the results can speak for themselves, it shouldn't be an issue. But that's more of a question for the end of the year, as long as the uptrend continues. So we'll just keep tracking it. But 298 is that resistance point for me. We changed the date to today. Earnings not for a couple months. And then that note we left for ourselves, that slight uptrend since January, still in play. We're looking to buy dips there, and we noted that decreasing profit margin for gaining market share. That still seems to be the play for them, and we'll just continue to watch it. So, yeah, that wraps this up. So, if you have any questions or want to leave your own input, by all means, leave a comment. I'd do my best to answer those questions. And otherwise, I would just be happy to read what your response is. But that wraps it up. So please like, subscribe, and I'll see you on the next one. Bye.